Have you been thinking about retirement planning and saving for your future? Or maybe you just want to grow your money and make it make more money for you. Maybe you've even thought about creating wealth for yourself or your family. If any of these things have popped into your head, you've probably thought or heard of the word investing. And let's be honest, that idea can be very, very complicated and tricky, and there's a lot of things to kind of know about it. But that doesn't mean you shouldn't do it. So the goal of today's video is going to be to take this idea of investing your money and make it one that feels like anyone can do it. So what we're going to talk about is what investing is. I'll take you step by step through creating a brokerage account, as well as show you how to invest in your first stock. And then we'll end with just some final tips and tricks so that you can feel comfortable in your investing journey. So let's get in the video.
Money mantra.
What is investing? Investing is when you put something into something with the hopes of getting something back out of it. Now, it's a really vague definition, but there's a reason for that. Investing can apply to a lot of different things. You can invest in people. I know I invest in my children every day when I put time, energy, and money into them, hoping that they'll be productive citizens later on in life. I invest in myself. I want to constantly learn and become a better person. But you can also invest in assets. So you can invest in things like property and real estate, of course, with hopes that you're putting money into something and then you're getting more money back out of it when it comes to those types of things. Or the thing that we're going to focus on today is that you can invest in the stock market. So you can buy pieces of publicly traded companies, we call them shares, and you hope that whatever that you buy that share at is going to be worth more later on, and therefore you can get more money out of it. But before we get too far into that, I do want to mention that you probably already are investing and didn't even know about it. So if you are working currently and you've ever signed up for a retirement account that your employer offers, whether it be a 401k or any type of IRA, you actually are already invested in the stock market. But the reason you maybe don't realize it or think about it very often is because you don't have to actively manage that. Your company either does it themselves or they've hired somebody to take your money and put it into the stock market where they see fit. Maybe that's through other shares of the company that you work for, or perhaps it's through buying mutual funds and things on your behalf. So you shouldn't be scared of this whole idea of being in the stock market. I know for me growing up, I always thought it was like this big gambling ring. And don't get me wrong, you can gamble in the stock market, but you can also be very responsible in the stock market. But yeah, think about it. You could already have money in the stock market and not really realize it. So hopefully this isn't too super scary. So let's look at what investing in the stock market looks a little bit more like. So I want to take you here to, this is one of my favorite tools. It's Yahoo Finance. It's free. You just type in Yahoo Finance online, and then you can type in any company that you want to look at, or index fund or mutual fund. And I know this is investing for beginners, so you might be like, what are all of those things? Don't worry about it. We'll talk about it in a little bit. But what I want to show you is this company right here. This is Walmart. And Walmart is currently selling for $155.65 per share. So that means for one little piece of Walmart, that's how much money it's going to cost you. And then what this is showing next to it is how Walmart's price has changed just today. So it's up, just about $1. And you can see how that's constantly changing. So as the stock market runs its course for the day, you're going to see your price going up and down. And I think this is where people get nervous about investing in the stock market. Maybe they buy Walmart at 155, and then you get in here and you notice that it's gone up and you're like, oh, awesome, I've made some money. But then maybe an hour later you peek at it and you notice that it's gone down below 155. And now you're like, oh no, I've lost money. I don't want to lose money. I worked hard for that money. I think it's important to remember that, yes, these things will fluctuate. You can look down at this chart right here. But the idea is that you're investing in companies that you believe in and that you think can, in fact, improve their situation. And so that eventually, over time, this stock will actually be worth more and you will make money in the long run. So don't be afraid of it. It's really something that you can get comfortable with the idea of seeing your money kind of fluctuate a little bit, and really the long-term effects of being able to grow your money in a more effective way versus sitting it in your savings account in your bank is much better than, worrying about these little kind of dips. But I will say though, start conservatively if that's where you're at. Like, I know for me personally, like, I mean, who likes to lose money? But it was really hard for me to watch my money go down at all at first. And so I had to start slow. I started with a little bit amount of money, and then I slowly built up as I got kind of used to this whole idea of fluctuations. Okay, so now that you know what it means to invest, and particularly in the stock market, let's go ahead and open an account. And I'm going to show you right from the nitty gritty beginning over to what it looks like once you get into an open account. So we're going to go right to Google. We're going to type into Google something along the lines of top stock brokers in the USA. We'll hit enter, and then we're going to get a list of stockbrokers. Go ahead and show you what that's going to look like. Let's see, I see Merrill Edge right at the top there. And you can scroll on down through. NerdWallet's got some ideas for you, etc. You can click on one of those, which are going to give you a list of some top stockbrokers. And so here's a particular list that I found. Some popular names: Fidelity, Merrill Edge, Charles Schwab, TD Ameritrade, Vanguard. These are all pretty popular ones. E-Trade, that you've probably heard of or seen commercials for. A lot of other banks, online banks and things, have their own investing platforms as well. So Ally Invest and things like that are there. So what you can then do is you can look through the site a little bit further. You can read about each of the type of stock brokerages and decide, well, which one fits me the best. And I can't exactly recommend one for you, but check these out, read what the different benefits and things are, and then make that decision for yourself. Once you've made that decision, you're going to go right to their website, and you're going to start basically following all their prompts to set it up. So I'll show you what Fidelity looks like. We'll click Visit Broker. And I'm just choosing Fidelity because, again, it's one I'm familiar with. Use the one that fits the best. So you can see how it says Open an Account. And they're going to give you some options. So what type of an account are you trying to open? Now, which account you're opening is going to kind of depend on a couple of things. One, what do you already have currently, if anything? Two, what are your income what's your income guidelines that you're meeting? Because some of these you can only make a certain amount of money for to have. The Roth IRA is one of those. I believe it's $129,000 for individual that you're allowed to make and still have a Roth IRA. If you make more than that, you can't. $204,000 if you're married with somebody else that you're allowed to make together before you can no longer invest and open a Roth IRA. Roth IRAs are typically my favorite because you use after-tax money, you put it in there, and then that money you invest, it grows, and anything that you earn off of that is tax-free. So tax-free is always nice. Rollover IRAs are typically when you have had a retirement account at a different employer and you've left that employer, but you still have that account sitting there. So you can typically roll those over into your current brokerage that you're using if you end up switching after you've switched jobs and still access that money. Traditional IRAs are very similar to Roth IRAs. There are just some differences as far as income guidelines go. And also withdrawals. So when you put money into these accounts, really the idea is that the money's going to stay there, right? These are retirement accounts. We're not going to touch this stuff until we retire. Now, let's just say that you invest a bunch of money in one of these things and then something crazy happens. Your car dies and you've got to buy a new one, or I don't know, someone has a big medical emergency. You can get your money back out of these accounts penalty free depending on the situation. It's one of those things you just have to check out. But of course, I always do advocate that you have an emergency fund of some sort. So hopefully if one of those things do happen, that your first go-to isn't this retirement account to get that money out. So anyways, you would select one of these accounts. We'll just click Roth IRA. And once you select that account, you're going in here and you're just going to start, it gives you a definition again of what it is, all the tax savings and things like that. And you're going to start putting your name and all of those things in. So you can scroll down to the bottom here and you can see where it says Get Started. So you would click on that and it's going to start asking you for your name. You're going to need your social security number, your address, all of those different things. to open up your account. Very similar to like most accounts you would open. They're probably going to ask you a lot more information because this is an account, like a retirement account that you're going to need to report things to the IRS for and things. So, you would put all that information in, have that there, and then let's fast forward a little bit to what happens after your account gets approved and you can actually open it and start putting money in it. All right, so now we're in my account. I'm going to show you what it looks like to actually buy a stock. I know this is where people, it's like, great, I got my account. How do I actually buy one? So what we're going to do is you're going to find the trade button. So no matter which brokerage you end up deciding, there is going to be a trade button. Click on it. Again, this could look a tiny bit different, but it's going to be all the same type of information that you're going to need. And inside of that, what you're going to then notice is that they're going to ask you what you're going to trade. Stocks or ETFs is what we're going to choose. Stocks, again, are just publicly traded companies. ETFs are things called exchange traded funds. So what will happen is that you can actually buy a what we call basket or group of stocks that are put together. And that's what an exchange traded fund is a group of stocks. And the type of stocks that might be in an ETF varies on the type of ETF that you're looking at. The next thing they're going to ask you to do is select an account. So this is where you're going to choose the Roth or the traditional IRA or whatever it is that you just decided to open up. And I should mention, and I didn't talk about this just a second ago about when we discussed what type of account to open, you can also open up basic investment accounts. So if you already have retirement accounts that you're fully funding and those are already going, then you can always just open up a basic investment account. The only reason people suggest that you shy away from those to start with is because those aren't tax advantaged in any way. So that means anything that you make in that account is going to be taxed just as if it were ordinary income, and you will need to include it in your tax return. Not that there's a huge problem with any of that. It's just that who wants to pay taxes if they don't have to? But anyways, this is where you're going to select the account that you just opened. Again, we're trading stocks. Next, we're going to go down here and they want us to type in the symbol. So I earlier mentioned Walmart. I only mentioned Walmart because it was the first thing that popped into my head. I'm not telling you whether or not you should buy Walmart, but I want to, for this purpose, pick one of those exchange traded funds. So we're going to do one of my favorites. It's called VTI. And VTI is the Vanguard Total Stock Market Index Fund. And so once I've typed in, you can notice this is what's called the ticker symbol. So these are just short and kind of nicknames, if you will, for different companies. You search based off those, but you can always type the whole name in. So let me back up just 1 second. Like, let's use Walmart again for an example. So if I don't know Walmart's ticker symbol, I'm just going to start typing the name of the company out until I see it pop up here. And then there's the ticker symbol right next to it, and I can just select it afterwards. So let's go back to VTI. VTI, again, is what's called an index fund, and it's a total stock market index fund. So this is one of those ETFs that we were just talking about. It's a basket of stocks. So when I buy VTI, what I'm buying is a group of stocks at the same time, and I'm buying just one share, if you will, to get a piece of each of those stocks. So what VTI in particular does is it takes the top 500 companies in the United States and it buys portions of each of those companies with every share that you buy of VTI. So how much of each company you're getting really is specific to the index fund that you're dealing with. If you ever want to know, and you should at least have an idea of what it's investing in, if you're going to put your money into it, you can click on this in Fidelity itself and you can research it and you can see, like I'll just slide over really quickly. Up here it says news and research. So all these brokerage should have a spot where you can go in and research stocks and see what they're all about. And that is where you can learn things like how much does it cost you to own the stock. So that's called an expense ratio. And as well as how much does it pay out in dividends. So if you don't know, dividends are portions of profits that companies pay out to people for owning their shares. So it's usually a set amount of money per share that you own for a company. And a lot of companies pay out quarterly. So that means once every 3 months, you're going to make a little bit of money for owning the shares of a particular company. Not all companies pay dividends.
But it's something that you can check out again when you're researching them. But also in that news and research, if I type VTI in, you're going to notice I can scroll down through a lot of information. And some of that information is going to be, okay, what companies make up this index fund, this basket of stocks, and in what percentage. So you can get a good idea of exactly what you're buying when you buy into something like VTI. Now, I also mentioned that VTI is an index fund. Index funds, again, are those baskets of stocks, but they are ran by computers, which is kind of interesting. And that might sound nerve-wracking, but hear me out on it. Basically, what happens, since the VTI covers the top 500 companies in the United States, it has a computer that's kind of monitoring who those 500 companies are. So if one of those stocks or companies should fall out of that top 500, the computer automatically moves the next best option in. So number 501 will get slid up in. And what's really sweet about that is you aren't stuck doing constant research and things on who are the top 500 companies so that you can adjust your portfolio. This fund is doing that for you. So all you have to do is keep going into this little ticket here and buying more and more of the stock as you see that fitting your portfolio. There's also a thing called mutual funds. Mutual funds work in mostly the same way as an index fund. The biggest difference between mutual funds and index funds is that mutual funds are run by people, not computers. So when you buy into a mutual fund, you've got someone working at one of these stock brokerages. In particular, if it were VTI again is an index fund, but let's pretend it's a mutual fund for a second. Someone at Vanguard would be monitoring and running that fund. And so there's a lot of folks who do that for a living. They put together mutual funds and then they put them out there that people can buy. And so what happens is if that person who's running that mutual fund feels that a particular stock should be removed or added to that, then they will do that manually. So you can kind of choose, like, would you rather have the computer running your funds? Great, then you want to do an index fund. If you prefer it be a real live person, then you can go for a mutual fund. Some things to think about for each one though. Index funds have lower what's called expense ratios, so it costs you less to own that index fund. Mutual funds are higher because, well, someone's running it and someone's putting that time and effort into running it. So just something to kind of think about. And also, mutual funds, you're dealing with, the emotions of people when it comes to, does this stock stay? Does that stock go? What is the stock market as a whole doing right now? And sometimes that can be a good thing or a bad thing. And that's really up for you to decide. But all right, we have chosen our symbol, VTI. That is showing us what one share of VTI currently costs. You'll see this bid and this ask. So what that means is this is the amount of money that folks are willing to pay for a share of VTI, and this is the amount of money people are asking them to pay for a share of VTI. So you can notice these are pretty close. These are averages, and that's where this number comes from. So I go down here and I want to buy. So you're going to notice I got two buttons here. I got buy and sell. We don't have any of this yet, so we're not going to sell any. So we're going to click on the buy. And then these next two buttons are pretty cool. One says shares and the other one says dollars. So what's neat about a lot of these brokerages, and especially Fidelity, is that you can buy what's called fractional shares. So let's say you're looking at this, and maybe you did when I first typed this in, and you're like, $222 for one of these things? I don't have that kind of money right now. I really just want to get my toes wet, dip them in. I don't want to put this much money in. That's fine. You can buy what's called a fractional share or just part of a share of VTI. So let's say that all you're really willing to start with is $10. Well, you can do that. You can just go right down here and instead of clicking shares, you're going to click dollars. And then you're going to type in the amount of money you are willing to start with. And we'll just put $10 in just to show that you can actually do that. I've typed my $10 in. And then I'm going to go down here and I've got one last decision to make. Do I want this to be at market price or do I want it to be a limit price? So market price means I am willing to buy my partial share of VTI for what it's currently going on the market. So this $222.92. All right. Whereas if I choose limit saying, no, I'm not willing to pay exactly what it's going for right now, but here's the price I am willing to pay for it. So maybe instead I'm willing to pay $220. So I would click limit, and then I would actually type in that limit price that I'm willing to pay. So 220. If I'm not choosing limit, I am choosing market, and there's no decision like that to make. It's just going to automatically execute my trade that's going to let me buy VTI at its current price. So, why would you want to choose a particular price? Well, maybe you're not willing to pay a certain amount for a stock, and so you would want to make sure you put a limit in there so that you're buying in when you want to. Of course, with the understanding that just because I choose to buy VTI at 220 doesn't mean I'll get the chance to do that today. If VTI never hits that price and no one's willing to sell me that stock, a share of that stock for that price, then I will not be able to buy it. So that is kind of one of the risks you take. If you're not in a hurry to buy something, though, you can always set this up so that when it does hit 220, if it ever does, it will execute that for you. It will actually buy the stock for you when you're maybe at work or on the beach or doing something different. You can make an order to make it do that. So before I get out of this, because I want to go back to market, notice it says day here, so that means you have just today for this to happen. So if this stock hits 220 today, then automatically it's going to buy my share. And otherwise I can choose to have it extend longer if I want to. All right. This is canceled after 180 days if not executed. So that gives you, that's what this is, stands for good till closed or canceled. So it's going to go for 180 days, and then this order will go away if I don't do anything else in the meantime. So you can choose one of those two options. So again, if you just choose market, though, you're accepting that you're going to buy it at whatever the current market price is, and you're fine with that. So then you go down here. It's going to give you an estimated value of how much it's going to cost if you're going to buy it at the current market price. I didn't choose an account yet because I didn't want to put my own information in there. But you would have an amount here if you had an account in, and then you're going to click preview order. So once you preview order, it's just going to show you all of the same information that we just went over. You're just going to want to double check that, make sure it all looks good and the way you want it to, and then you're going to hit place order. Once you've done that, especially if you've done a market order, it's going to go right on through, and you're going to see your stock that you purchased, your numbers of shares right in your account. So it's going to, you can see here it says, I'll get rid of this thing real quick. I have a couple accounts in here, but you'll see that it says summary. This is where it's going to show me my multiple accounts. And then I can click on each account and I can see the positions that I have, that I own shares of. So these are each of the different stocks, funds, whatever that I have. And then just some other information. This activity and orders is where you can click on that and see, like, let's say you did do that limit price for VTI and you're waiting for it to hit 220 and you want to see if you actually bought any. You could always click on the activity and orders to see what have you bought in the past, did my order go through, etc. So once you've clicked buy and you've gotten finished with that ticket that I just showed you, you own some stock in the stock market, which is pretty neat. And so really from there, it's just a matter of leaving it there, hopefully longer term, and seeing if it can grow and make you some more money. And then over time, you keep getting back in here and putting more and more money in order to build your portfolio. And a lot of the companies make it pretty easy for you to put money in. Up here, Fidelity, next to the trade button, has a transfer button. So you can click on that. It's going to ask you what account you want to transfer money from. So you are going to need to link a bank account to your brokerage. And so then you can choose your bank account in that list, and then you can choose your retirement account that you want to send the money to. And it's really that easy. So if you've ever transferred money between bank accounts online before, this is going to be the exact same idea. So pretty straightforward and pretty intuitive. Hopefully you feel better now about the process of opening up a brokerage account and buying a stock. If you would like some more resources, this book right here, I Will Teach You to Be Rich, is actually a really great resource, not only for investing and talking about how it can help you grow your money, but also gives you just like a whole package, like what are some great savings accounts to use, how do you make big purchases, things like that. It's a great price. It's an awesome book. It's a great tool. So check that out if that's something you're interested in. I'll put a link down below as well. This is right on Amazon. But I really do encourage you, find $10 if it has to be $10, and really get that, put it in a brokerage account and just see what you can do with it. trust me, once you start investing and start watching your money grow, it's really awesome to see. This is Money Mantra. I'm JP. See you in the next one.